Real estate is often touted as one of the best investments you can make. But what if I told you that investing in real estate is a bad idea? In fact, it could be one of the biggest financial mistakes you'll ever make. Don't believe me? Keep watching to find out why. In this video, we're going to talk about why you should never invest in real estate and what you should do instead. But before we dive in, make sure you hit that subscribe button and turn on notifications so you never miss out on our latest videos. Real estate has been a popular investment choice for decades. Many people believe that investing in property is a safe and profitable way to build wealth. But the truth is, investing in real estate can be a risky and costly endeavor. One of the biggest misconceptions about investing in real estate is that it's a guaranteed way to make money. However, the reality is quite different. In fact, according to a study by the S&P Dow Jones Indices, the average return on investment for residential real estate was only 8.6% between 2000 and 2019. When you factor in all the hidden costs, such as property taxes, maintenance, and management fees, that number drops even lower. Another downside of investing in real estate is its illiquidity. Unlike stocks or bonds, real estate is not easy to sell quickly. It can take months or even years to find a buyer or renter, which means your money is tied up and not earning you any returns. This can be a major problem if you need to access your funds quickly. And let's not forget about the risks. Real estate prices can be unpredictable, and a downturn in the market can wipe out your entire investment. Plus, there's always the risk of unforeseen circumstances, such as natural disasters or a tenant who doesn't pay their rent. All of these factors can make investing in real estate a very risky proposition. So what should you do instead? Well, there are plenty of other investment options out there that offer better returns and fewer risks. One of the best alternatives to investing in real estate is investing in the stock market. Over the long term, stocks have historically provided average returns of around 10% per year, which is higher than the average return on investment for real estate. Another option is to invest in a diversified portfolio of mutual funds or exchange-traded funds, ETFs. These investments offer exposure to a variety of asset classes, including stocks, bonds, and commodities, which can help reduce your risk and potentially boost your returns. If you're looking for even more diversification, you may want to consider investing in alternative assets, such as private equity, hedge funds, or even cryptocurrency. These investments are generally not available to the average investor and can be riskier than traditional investments, but they also have the potential to offer higher returns. In conclusion, investing in real estate may seem like a good idea, but the numbers and risks tell a different story. By considering other investment options, you can potentially earn higher returns with fewer risks. Whether you choose to invest in the stock market, mutual funds, or alternative assets, it's important to do your research and understand the risks before making any investment decisions. Thanks for watching. If you want to really start becoming rich, this next video shows what you need to master before anything else. Make sure to subscribe, click the link to our video about why you aren't rich, and we will see you over there.